Hello, my name is Mayanka. I am accounts and a finance trainer from Uplatz. Today, in this class, we will discuss section 166 to section 169 of the Income Tax Act. Section 159 to section 165 are already covered by us in our previous videos, in which we have discussed who is the legal representative, who is the representative assessee, liabilities of the legal representative and the representative assessee, and we have also discussed how we will calculate or how we will apportion the amount of income in the case of legal representative, and we have also discussed the rights of the representative assessee. So, in our previous classes, we have discussed some important and relevant provisions which are relating to the liability in special cases, which are these sections are important, and these sections are related to determine the liability, tax liability in the different and the special cases. Now, in this class, we will discuss section 166 to section 169. These are also important section of such chapter. So now we will start. Direct assessment or recovery, not what. Section 166. As per section 166, there is the direct recovery will be made from the person. From the person means if there is any person whose income is received by any other person, then the person whose income is this will be directly assessed, and we will recover the amount of tax from such person. We will recover the amount of tax directly from such a person. For the example, there is a person, Mr. Ram, and on the behalf of Mr. Ram, on the behalf of Mr. Ram, on the behalf of Mr. Ram, Sohan received Sohan received 10,000 rupees. He received 10,000 rupees. Then such 10,000 rupees will be taxable in the hands of Ram. It will be received because only on the behalf of Ram he has received such amount. So then it will not be considered the income of Sohan because he is receiving it only. Then such income will be considered as Ram, and it will be taxable in the hands of Ram, and the amount of tax will be collected from the Ram only. It will be collected from Ram only. So, in the case of a beneficiary or the person on whose behalf, in the case of beneficiary or the person on whose behalf or for whose income is recovered, receivable, is received by any other person, then such beneficiary or the person on whose behalf or whose benefit it is so received shall be liable to be assessed directly. He shall liable to assess such income, and that tax can also be recovered from him. Is that if there is a person on whose behalf the income received, there is a person whose income is received by the any other person, then such beneficiary or person on whose behalf or for whose income it is received shall be liable to assess such income, and he shall directly make the payment of tax. He shall make the payment of tax. Means the person on whose behalf the income received, by any other person, then such person shall assess such income directly, and make the payment, or the tax will be recovered from him. As per such example, Mr. Ram, Mr. Ram on the behalf of whom Mr. Sohan received 10,000 rupees. On the behalf of whom Mr. Sohan received 10,000 rupees from any other person, which is relating to Mr. Ram, which is the benefit of Mr. Ram. Then such income will be assessed in the hands of Mr. Ram only. It will not be assessed in the hands of Mohan. And Mr. Ram will make the payment of tax on such amount. He will make the payment, he will assess its income directly. So, in the case of the beneficiary or the person on whose benefit, on whose behalf, or for whose income is received by any person, then such beneficiary or the person on whose behalf such income is received or for whose benefit it is received shall be liable to assess directly. He shall be liable to assess directly mean he shall assess in his own hand, and the tax will be recovered from such person only. From such a person only. Remedies against property in the case of representative assessing. What are the remedies are available in the respect of or in the against of the property of representative assessee. Remedies against the property in the case of representative assessee. Section 167. Section 167 of the Income Tax Act. So what are the remedies? The assessing officer shall have the assessing officer, the AO, has the same remedies against all the property of any kind. The assessing officer, he will provide or he has the same remedies. He has the same remedies against all the property of any kind of property vested in or under the control and the management of any representative assessor, as he would have against the property of any other person liable to pay any tax in respect to the fact that whether the demand is raised against the representative assessee or against the beneficiary direct. Is that when there is a person, there is a person, and such person is the representative assessee of any other person. There is a person just like there is a person, Mr. Sohan, and he is the representative assessee. He is the representative assessee of Mr. John. The John, he is the non-resident. John is the non-resident. He is the non-resident, and Mr. Suhan, he is the representative assessee. Means he is working as an agent. He is working as an agent in India, and he received the income on the behalf of such John. He earned the profit on the behalf of John, or he represent himself as a John in India only on the behalf of or on the basis of John. On the basis of John, then he will be considered as a representative assessee of Mr. John. He will be considered as representative assessee of Mr. John. So if for any kind of property which is under the control of Suhan, if there is any property of John in the control of Sohan, if there is any property which is in the control, in the management of any representative assessee, as he would have against the property of any person liable to pay tax, liable to pay any tax irrespective to fact that whether the demand is raised against the representative assessee or against the beneficiary direct. Then in the respect of such property, there are some remedies in the respect of such property, the property which is related to the another person, and the control and the management of such property is in the hands of representative assessee, then in the respect of these property, the assessing officer, he has some remedies. He has some Remedies means the assessing officer provides some remedies in the respect of those assets, in the respect of those properties which are under the control and which are under the management of any representative assessee. Any representative assessee, the representative assessee who will make the payment of tax on the behalf of another person, on the behalf of another person. So the assessing officer shall have the assessing officer will provide the same remedies against all the property of any kind, property of any kind, vested or in or under the control or under the management of any representative, which is under the control or which is under the management of any representative group, as he would have against the property, as he would have against the property of any person liable to make the payment of tax, irrespective to the fact that whether the demand is raised against such person or such or the beneficiary. So, so such person, such a representative assessee, he will collect the amount of income on the behalf of such beneficiary. He will collect the amount of income from on the behalf of such beneficiary. He will receive the incomes. Then such in the respect of such assets, then such person will be Sohan will be considered as representative assessee of John. And if he has any of the property of Mr. John, if he has any of the property Mr. John, then there are in the respect of such property there are some remedies which are provided by the AO, which is provided by the AO. Number three, executors and administrator. What is the meaning of executor and what is the meaning of administrator? Section 168 and Section 169. Section 168 and Section 169 of Income Tax Act, executor and the administrator. So first, who is the executor and who is the administrator? First, we will discuss who is the executor and who is the administrator. Who is the administrator? So the executor is the person who is appointed. The executor is the person who is appointed to carry out the instruction and the wishes of the deceased. And the administrator and to administrate the estate of the deceased person. Means the executor is the person who will appointed by the person who will appointed by the person to carry out the instructions and to carry out the wishes of the deceased person. Me such a person is appointed, such person is appointed to fulfill the instruction, to fulfill the wishes of the deceased person, and such person is also administrate the estate of such deceased person. He will administrate, he will carry, or he will search, means he will take care or he will administrate the estate of such deceased person. He will authorize or he will appointed to carry out the wishes, to carry out the instructions of the deceased person, The executor is a person who is appointed by the tester of the bill. Means the executor is a person who will be appointed by the person who is making his will, just like for the example, there is a person Mr. Mohan, and he is making his will, his will, and he appoint Mr. Ram as his executor. Means after his death, after the death of Mr. Mohan, he will fulfill his all the wishes. Means according to the bill, according to the bill which is maintained by the Mohan, Mohan, sorry, which is maintained by the Mohan, yes, which is maintained by the Mohan. Then such executor means Mr. Ram, he will administrate the property, administrate the estate of such a deceased person, and he will also fulfill all the wishes. He will also fulfill the wishes and illustrations and the instructions, sorry, instructions of the Mohan. So such a person will be considered as, then the Ram is considered as executor. He will be considered the executor of Mr. Mohan. Is that the person who is appointed to carry out the instructions and to carry out the wishes of the deceased person, of the deceased person, and the person who is appointed by the individual who is making his will, who is making his will, then such person will be known as, then such person will be considered as executor. An administrator is a person who is appointed by the competent authority to administrate the estate of the deceased person, where when there is no executor. The administrator is the person who is appointed, who is authorized by the competent authority, who is appointed by the legal authority to administrate the estate of such a deceased person when there is no executor. Means if the executor is not there to take care or to administrate the estate of the deceased person, then the competent authority appoint a person who will administrate the estate of the deceased person, and the person who is appointed by the competent authority will be known, and he will be known as administrator is that when there is any person who is appointed by the deceased person, means before his death he appoint a person that he will fulfill all the wishes, he will fulfill all the instructions of the deceased person, and the person who is appointed by the individual to makes his will, who means it is the person who is appointed by the person who is making his will, then such person is to be known as executor. Then such person will be known as executor. Or if any person who is appointed by the competent authority, when there is no executor is appointed by the person, then the competent authority will appoint a person who will who will administrate the estate of such a deceased person, then such person shall be known as administrator. Then such person will be known as administrator. Means the person who is appointed by the deceased person, he will be known as executor. And when the executor is not appointed by the such person, then the competent authority they will appoint a person who will administrate the estate of the deceased person. Then such person will be known as administrator. Then such person will be known as administrator. If a executor is there, no need to appoint the administrator. No need to appoint the administrator. So the executor include an administrator and other person who is administrating the estate of deceased person. The executor includes administrator or any other person who will administrating the estate of the deceased person. Means the person who will administrating the property of the deceased person, then such person will be considered as executor. Then such person will be considered as administrator, or any person who is any person who is administrating the estate of the deceased person will be known as executor. Chargeability of income in the hands of executor. Chargeability of income in the hands of executor. When there is any person who is appointed by the person as a executor. Means if there is any person who is making his will, or there is any person who is means who become die, and he is appoint any person as executor, or any other person who is appointed as administrator by the and by the competent authority, or any other person who has been appointed to administrate the estate of deceased person. Is that any of the administrator, any of the executor, or any other person who is appointed that you will administrate the estate of such a deceased person? Then the income which is arising from such estate, the income which is earned from such estate, will be chargeable to tax in the hands of such executor. In the hands of such executor, in the hands of such administrator, it will be taxed, it will be charged. Is that for the example, there Mr. Ram, he is appointed as an executor. He was appointed by Mr. Mohan as an executor for a estate, for a for a estate, and from his estate, from such estate, Mr. Ram earned, or Mr. Ram received 1,50,000 rupees. He has received 1,50,000 rupees from such estate. From such estate, such such 1,50,000 rupees will be assessed, in the hands of in the hands of Ram. It will be assessed in the hands of Ram only. It will be assessed in the hands of such a executor. The executor is Ram. Is that if there is any person who is appointed as executor, who is appointed as administrator, or any other person who is administrating the estate of such a deceased person, and any of the income which is earned from such estate, any of the income which is earned or which is received from such estate by such executor, by such administrator, then such income will be chargeable, then such amount will be chargeable to tax in the hands of such executor, in the hands of such administrator. Is that as per the example, such 1,50,000 rupees, such 1,50,000 rupees which is received by the Ram as an executor, will be taxable, or it will be chargeable to tax in the hands of Mr. Ram, in the hands of Mr. Ram. In the case there is one executor, in the case when there is a one executor, so if there is one executor, then the assessment shall be made on him in the status of as a individual. Means if there is only a one executor, just like there is only a one executor and the executor is Ram, who is an individual, then such income will be assessed, it will be chargeable to tax in the hands of Mr. Ram as an individual, as an individual. In the case of more than one executor, in the case of more than one executor, so if there are more than one executor, then such income will be assessed, then the income will be assessed in the hands of such administrator, such executor as the AOP. As the AOP means, if there is a there is a many persons as the executor, means there are ABC, and they are appointed as a administrator, as a executor, to administrate the estate, or to administrate the property of such a deceased person, and any of the income, just like 1,50,000 received, 1,50,000 is received by ABC, then such income will be assessed in the hands of ABC, assessed in the hands of ABC, and taxable as the provision of AOP, and it is taxable as per the provision of AOP. Means according to the provision of A. It will be, if on the other hand there are more than executor, there are more than one executor, then the assessment will be made on them in the status of AOP, in the status of AOP. The residual status of the executor shall be determined on the basis of residential status of the deceased person. Means the residential status of the executor, the residential status of the executor will be determined on the basis of whether whether the such a deceased person is resident, non-resident. If he is resident, whether he is residential resident, ordinary resident, or non-ordinary resident. Means the residential status of such executor will be depend upon the residential status of deceased person. If the deceased person means, for the example, there is the Ram, he is the executor, and Mohan, he is a deceased person. If Mohan is a resident, if the Mohan is a resident, then executor Ram will be considered as a resident. He will be considered as a resident. If Mohan is not resident, is a non-resident, then Ram will also be considered as, then Ram will be considered as non-resident. Means on the basis of residential status of the deceased person. Means if the deceased person was resident or ordinary resident or non-ordinary resident, then the executor will also be considered as resident. He will also be considered as resident. If the deceased person is non-resident, then the executor will also be considered as non-resident. He will also consider as non-resident. So the residential status of the executor, the residential status of the executor will be determined. It will be determined only on the basis of. It will be determined only on the basis of residential status, only on the basis of residential status of the deceased person, only on the basis of residential status of the deceased person during the previous year in which the death taken place. If such person, the deceased person, stay in India, he lived in India in the previous year for the period of more than 182 days or more than 182 days, then such person will be considered as resident of India. Then such person will be considered as resident of India. And otherwise, he will not be considered a resident of India if he is the Indian citizen. He is the person of India. If he stay in India for the period of 182 days or more than 182 days in the previous year, then he will be considered as resident. He will be considered as resident. Or next condition is that if he stay in India for the period of 365 days or more than 365 days in just preceding 4 years, or he stay in India and stay in India at least 60 days in the current year, in the this previous year, then he will be considered as person resident of India. So if any of the condition is satisfied, then the person will be considered as a resident of India. And if the deceased person is considered as a resident of India, then the executor will also be considered as a resident of India. He will also consider resident of India. Separate assessment on executor. Separate assessment on the executor. The assessment of the executor shall be made separately from any assessment. Means the assessment on the executor, the assessment on the administrator shall be made. It shall be made separately. It shall be made separately from any other assessment that may be made on him in the respect of his own income. Means in the respect of income of such a deceased person, the assessment in the respect of such income shall be made on the such a executor. on the such executor separately means on such executor there may be two assessment. Number one assessment which is made on the behalf of such means which is made on the as a executor means on the behalf of the income of deceased person, and number two the assessment in the respect of his own income. Any other assessment, there may be another assessment which will be made on whom, on the behalf of his own income, on the behalf of his own income. So the assessment of the executor shall be made separately, it shall be made separately from any assessment that may be made on him in the respect of his own income. Such assessment will be separate, it will be differ, it will be separate from the assessment which is made on him on the basis of his own income. It will be separate, it will be separate assessment shall be made on the executor or the executor on the total income of each completed previous year or the part thereof as is included in the period from the date of death of the deceased to the distribution of the complete distribution to the beneficiary of the estate accordingly or according to their several interests. Is that the separate state separate assessment shall be made. The separate assessment shall be made in the hands of executor. It will be made in the case of executors or the executor on the total income of the on the total income of each and every assessment, sorry, each and every completed previous year, each and every completed previous year or part of the year, part of the period, and the period, and such period will be start from the date of death of deceased person to the complete distribution of such complete distribution of the estate to the beneficiary. Means the assessment shall be made, the assessment shall be made on the total income, it shall be made on the total income of the executors or executor for each of the completed year or for part of the year, part of the year or part of the period. From such period will be start from the date when the person will be expired, when the it will be start from the date of death of such deceased person till the date when the complete distribution of the estate will be made by the such executor to the beneficiaries according to their several interests, according to their several state, so several interests. So the separate assessment shall be made from the date of death of such a deceased person till the date of such a distribution. If it is completed any previous year, then it will be made for the such previous year. If it is a not completed full previous year, then it is made for the part of the year. If it is completed 1 year full and some part month, some part years means part of the year, then it will be made for both. Means the separate assessment shall be made on the hands of executor. It will be made on the hands of executor. So the income which will be chargeable to tax, the income chargeable to tax in the hands of executor or in the hands of administrator is the income of the period which is commencing from the date of death of such executor, date of such executor. Any income in the respect of any period prior to the date of death is that from the first of the accounting year and ending with the date of death shall be assessed in the hands of such a legal representative. It will be taxable in the hands of legal representative as per section 159. Is that if there is any income which is chargeable, any income which is related to the, if there is any income which is related to the prior period before the death of such assessee. If there is any income which is relating to such a person, which is relating to such a deceased person, and death, before the death, then such income will be taxable as per section 159. It will be taxable in the hands of legal representative as per section 159. As per section 159. Just like for the example, there is a for the Example, there is Mr. Mohan. He is a deceased person and deceased. And Mr. Ram and Mr. Ram, he is the executor. Mr. Ram, he is the executor of Mr. Mohan. He is the executor of Mr. Mohan. And and Mr. Mohan expired. Mr. Mohan expired, for the example, 1st June 2019. He expired on 2019. All the estate is a bifurcate, or it is a distribute. It is distributed on it is distributed on 31st December 2019. 31st December 2019. Then the assessment on Ram. The assessment on Ram shall be made. The assessment on the Ram shall be made for the period from 1st June 2019 to 31st December 2019. Means the assessment on the RAM as a separate assessment. This is the separate assessment from his own assessment. So the separate assessment shall be made on Mr. Ram from 1st June 2019 to the date of distribution to 31st December 2019. And such assessment shall be made as an executor. If if Mohan expired, on 1st May 2019, 1st May 2019, and state distribute. For the example, it is distributed on 31st July 2020. Then the assessment shall be made. The assessment on Ram shall be made. It shall be made for the previous year 2019-20, and and for the part period from for the part period from 1st April 2020 to 31st July 2020. 31st July 2020. Then such assessment shall be made on Mr. Ram. On Mr. Ram means the assessment shall be made on Mr. Ram for such particular time period. For such a particular time period, the assessment shall be made. The assessment shall be made. So the income which is chargeable in the hands of executor or in the hands of administrator is the income of the period which is start from, the period which is commencing from the date of death. The date of death of the deceased. Means such income will be assessed in the hands of executor from the date of death till the date of distribution of such assets, distribution of such estate. And if any income, if there is any income which is earned, which is arise before the death of such person, then it will be taxable as per section 159. Means it will be taxable in the hands of legal representative. It will be taxable in the hands of legal representative. Income applied for the benefit of specific legality to be executed from the total income of executor. If the amount of income which is received by the executor the amount of income or any of the benefit. If there is any amount of income which is received by the executor and such income is applied by the executor for the benefit of specific legatee, then such income will not be taxable in the hands of such executor, means it will be excluded, such amount will be excluded from the total income of such executor, then such income will be excluded from the total income of the executor. It will not be taxable in the hands of such executor. Is that if there is any income which is earned by the which is earned by the executor from the state, means when we will computing the total income of any previous year, if any income of the state of that previous year which is distributed or which is applied to the benefit of any specific benefit for the specific legatee for the state during the previous year, then it shall be excluded, then it shall be excluded when we will compute the total income of the assessee of the executor. Is that if there is any income which is used by the executor for the specific legatee of the state, for the specific legatee of the state during the previous year, then when we will calculate when we will calculate the total income of such assessee, sorry, of such executor, then such amount will be excluded, means the amount which is used for the benefit of legatee will not be taxable, it will not be taxable, it will be deducted or it will be excluded from the total income of such executor, and the balance amount will be taxable, and the balance amount will be taxable in the hands of such executor, in the hands of such executor. For the example, the amount taxable in the hands of ram is 1,50,000 as executor. As executor, he used 50,000 for the benefit of specific, for the benefit of specific legatee, then such 50,000 will be reduced, it will be reduced from his income, from such income, and only 1 lakh rupees will be taxed, it will be taxable, only 1 lakh rupees will be taxable, means if there is any income which is used by the executor for the benefit of specific legatee of the state, then such income will be deducted, it will be reduced when we will calculate the taxable income, or when we will calculate the total income of such a executor in the previous year, in such a previous year. The income so excluded shall, however, be included in the total income of such a specific legatee. If such 50,000, it will be excluded from the income of Ram, but it will be included included in the total income of specific legatee. It will be included in the specific income of legatee. However, where the executor apply a portion of his income, where whenever or however, where the executor, where there is an executor and he apply a portion of his income which is received by him from the state of the, but in the particular way, pursuant to the direction of that trustee or other legal obligation. It is merely an appointment, a portion. It is only the application of income, and it would not be entitled the executor to claim any reduction in the respect of such income so apply. Is that if there is any executor and he apply his income, and he apply his income, the income which is received by which is received from such state, if there is any executor, he has received any income from such state, and he wants to, or he use such income for the other legal obligation, for the other legal obligation, then it will only be considered as only, it will be considered only the application of income. Means it is not the, it is, means he will not be eligible or he will not be entitled to take the deduction, to take the deduction in the respect of such use, in the respect of such income which is applied by him, in the respect of the income which is applied by him. So if there is any payment which is made by the, if there is any payment which is made by the executor, made by the executor of the cost of that duty or any other duty which are relating to the state, which are relating to the state, or if there is any payment which is made by the such executor of any, on the behalf of any beneficiary or property of the beneficiary, then such amount cannot be excluded, then such amount cannot be excluded when we calculate the total income of such executor. Means if the executor incurred any expenses and such expenses is not considered as, such expenses is considered as application of income. Means when there is any amount spent by the executor and such amount, and the such amount which is spent by him will not be considered as, it will not be considered as necessary. Means it is only the application of income, it is only the application of income, then he will not be eligible. Means he cannot claim, the executor cannot claim the deduction in the respect of such, in the respect of such expenses, in the respect of such expenses which is made by him, because it is only the, because it is only the, it is only the application, it is only the application of income, it is not mandatory to incur, it is only the application. Means to reduce the tax liability, it is made by the executor, it is made by the executor only to reduce the tax liability. Under the general law, when the executor gives his consent to the specific legatee, the title of the legatee relates back to the, to the date of death, and consequently the income arising after the death and before the assets belong to the legatee is taxable in the hands, but not as the income of executor. Is that as per the general provision, as per the general law, when there is any executor and the executor gives and provide his consent to the specific legatee, when the executor provide his consent to the specific legatee, and the title, and the title of the legatee relates back, means the title of the estate or the title back to the legatee, it is back to the legatee from the date or to the date of that. And in this case, the income from such estate, the income from such a property will be taxable after, if after the death of the deceased person there is any income, then it will be taxable in the hands of such a legatee, it will be taxable in the hands of such a legatee, it will not be taxable now, it will not be taxable in the hands of executor, it will be taxable in the hands of legatee only, it will be taxable in the hands of legatee. Now it will not be taxable in the hands of such executor, because now he has the legatee, he has the proper, he has the proper title of the estate in his own hand. So it will not be taxable in the hands of executor. However, it is only the income distributed or applied for the benefit of a specific legatee during the previous year, which should be excluded from the executor income. But if there is any, if there is any activity where the income is used by the executor for the benefit of a specific legatee, if there is any amount of income which is used by the executor for the benefit of specific legatee, then such income will be excluded from the total income of the assessee, from the total income of the assessee, or it may be included, or such income will be included in the income of such a, in the income of such a legatee. Such specific legatee means such income will be excluded from the total income of the assessee in the previous year, in the particular previous year, and such income will be included in the income of total income of such a specific legatee, if such, in the income of such a specific legatee. So however, it is, if there is only the income distributed or income which is applied for the benefit of any specific legatee during the previous year, which should be excluded from the executor total income. In other words, if the income is not distributed or not applied in the previous year, then it would be taxable as the part of income. Then it will be taxable as the part of income of the executor. If the executor is also the sole beneficiary, it does not necessarily follow that he received the income in the later caption. In the later caption. If the legatee is the residual legatee, if the person he is only the, if there is a legatee, he is the residual legatee, means he is not the specific legatee, then the income from such a residual, then the income from the residue is the income of executor and it will be taxable in the hands, in the, it will be, means the income from such a residue is the income of the executor and it will be taxable in his hand. It will be taxable in the hands of such a executor. It will not be taxable in the hands of such a residual legatee as long as the estate has not been completely administrated. And it is only after the estate is fully administrated and the net residual is at a certain that the residuary legatee get the title of his income, of it is income, and now such income will be taxable. Now such income will be taxable in the hands of such a legatee. If there is any residual legatee, then the income will be asset in the hands of executor till the date of, till the date of completion of administration. When the administration will be complete, then the income will be taxable in the hands of such a legatee. When the title will be transferred to such a legatee, means when the administration will be complete, and when the administration will complete, that the title will be back to legatee, then the income from such assets from such estate will be taxable in the hands of such a legatee. It will be taxable in the hands of such a legatee. This principle would apply irrespective of the fact that whether the residual is settled in that trust for the life tenant or it is blanketed, blanketed absolutely, and it would apply even if, it would also be applied even if a part of the income of the estate has been actually paid on account of residual legatee pending the administrator of the estate. However, the administrator may be regarded as completed the executor assent of to the residue to the residuary legacy as valid and the legatee's title as established. Although some liability due by the state may retain undischarged. It will be undischarged. Now we will discuss the right to executor to recover the tax. Now we will discuss the right of the executor, that the executor he has the right to recover the amount of tax which is paid by him. The executor he has the right of reimbursement, means he will recover the amount of tax which is paid by him, which is paid by them as a representative assessee. Is that according to section 169, the executor he has the right for retention, or he has the right of reimbursement, or and he has the right to recover the amount of tax which is paid by him, which is paid by him as the representative assessee under section 162. Is that if there is any executor, he has made the payment, made the payment of any tax, then he make the payment of any tax on the basis of, or as the representative assessee, then then he has the right to recover the amount of such tax from the person on whose behalf it is paid. Is that for the example, if Mr. Ram, he is the executor and Ram pay 50,000 rupees as a tax, then he has the right to recover. He has a right to recover such a 50,000 rupees from the person on whose behalf he has paid. On whose behalf he has paid such 50,000. So he has the right to collect. He has the right to reimburse. He has the right to retain such 50,000 rupees. Such 50,000 rupees, which is paid by him as a tax as a representative assessee of such particular person, and he is eligible to take the amount from such particular person. So, on the basis of such, we have covered or we have discussed some important sections, section 166 to section 169 of the Income Tax Act. On the basis of this, we have discussed the concept of executor and the administrator. Who is the executor? Who is the administrator? What is the liability? What is the liability of the executor? What is the liability of administrator? And the income of another person will be taxable in the hands of such executor, and he will recover the amount of tax which is paid by him on the income of such executor. Means how he will recover, means he has the right, the executor has the right to recover the amount of tax which is paid by him on his income from such particular person. So on the basis of such concept, on the basis of such class, we have covered section 166 to section 169. These all sections are relating to the liability in some special cases, so kindly consider all the videos of such topics so that you can properly understand each and every concept which is relating to such a chapter. Thank you so much for watching this video. Okay, bye bye. Take care.